Hi, my name's Arthur Reed, and I want to take a little bit of time to talk about the new tax law. A lot of people have been talking about it. I've been doing a lot of reading. There's a lot of stuff on the internet out there, and I get questions during tax season. So what we thought we'd do is put together a video and talk about what I consider to be what to tell your individual tax clients about the new tax law. My focus on this one is not to talk about the business side of things, but sometimes we talk about business because it's interesting. But as we go through and look at these different provisions that came out, I get all kinds of questions, half of which have nothing to do with what eventually got passed. Now, if you got to see a promo I did earlier before the end of the tax season, what I did is I started out with saying, with a big if, what would happen if Congress passed this law? And I went from it has to pass the House, which it did, has to pass the Senate, which it did. It went to joint conference, which we thought it was going to. It went back and got rectified, and they had some changes at the last minute, and then finally the president signed into law, and all of a sudden it was done, and we had the law. And it's like, all right, the law has now been passed. It's before the end of the year. We've got some time to do those things that with our clients that we've been telling them these things might change, be ready for it. Maybe you even told your clients to go out and maybe make an extra real estate tax payment or something like that if it was allowed. But we tried to be proactive over this last period of time before December 31st came around. Then as the law got passed and we started looking at it, I had a question. It wasn't a very big question, but I was like, okay, so how do you handle this? And I really wasn't sure, so I started reading. Wasn't a lot written. There were a lot of things written, but the things were so date sensitive that I don't know whether that's a pre-law or a post-law. I don't really know. And then the more I read, the more questions I had. I started thinking about pass-through entities. I started thinking that, does this apply? Does this not apply? This could be a big issue. And the more I looked in those areas, the more information I couldn't find. And I was like, whoa, this is like getting kind of scary. And I looked into even more, and I checked some of the tax services, and they began to start pushing some things out and some analysis and what happened and trying to give us some understanding of what happened. And as those questions got, I don't want to say answered, but at least clarified a little bit, I came up with more and more. And then all of a sudden, the wave of people asking me questions about the law got greater and greater and greater. So what are the things that we're waiting for at this point? I mean, the law is now passed where by the time you're watching this, you're probably deep into tax season or maybe even out of season. But we're trying to stay up to date with what these changes are, but Congress has already acted. They already passed the bill. So what are we waiting for? Well, these are things that I jotted down. We're waiting for things like a technical corrections bill. When you put together this much legislation at one point in time, there are going to be some things that's like, it's not what we intended, even though they have a lot of people writing it. So there should be a technical corrections act that comes along that fixes things. Some things that you probably won't even be familiar with, or I won't either be, but it's like, okay, those things have to be fixed. Some of them might be technical corrections because of some unintended consequences, and I'll talk about that in one of my sections that we go through in just a couple minutes. But that's one grouping. Those would be the obvious things that have to be fixed. The Treasury Department will at some point in time write what we call regulations. Now, regulations are simply interpretations of the Internal Revenue Code, which is effectively what gets passed through this act. And these regulations oftentimes take hearings and take a long time to come through. Sometimes they get them through fast, but I doubt we're going to see any regulations for a while. And businesses need these because there's a lot of questions, especially in the business side of things, that it's like, so how does this apply to this and that? So they need direction on it. The Internal Revenue Service will issue what are called revenue rulings, and these revenue rulings, remember the IRS is underneath Treasury, okay, just to put those in perspective. And when they go through and look at these revenue rulings, they're going to issue them on things where people have a lot of questions, and they are much faster to market with a revenue ruling than they are with Treasury regulations. So we might get some guidance there. And those areas represent whether we get technical corrections or Treasury regs or we get revenue rulings. Those represent what we call authority. And the authority is what we base our positions on when we give advice to clients and also if we write memos to clients and then hopefully as we file tax returns for clients. So we do those based upon the information that's available. Now, the guidance that I'm getting right now is not from any of those because they're not out to my knowledge. But what's happening, and again, when you're watching this versus what I'm taping is two different things. But any guidance that I'm getting right now are from tax services. I don't know where you are with your personal tax services or how you get your updates. There's a lot of good ones out there. I have a number that I get through different types of things that I get at the university, I'll put it that way. And I'm always going to their site to look for interpretations of the new tax law, what's the insight of their authors who are specialists in those specific areas. And so I'm trying to get the latest breaking news stuff that's coming out, and that's a great way of staying current when you need to stay that current on those things. So tax services out there, they have things like Research Institute of America, RIA, is a great one with Checkpoint. CCH has a good one too, and Teleconnect. There's a lot of different ones out there, and some of them are lower cost. Parker, which used to be Kleinrock, is a very good one as well. Less expensive, very good writers to it, a lot of insight. So I go to different places that provide good analysis of the tax law. I also read a lot of articles in that area. And the articles that I'm looking at oftentimes are, and please, when you're looking at an article, check the date of the article. If it was written in early December, don't read it. I mean, you can read it, but it's probably not the right law, because the House version differed from the Senate version, and those two versions then changed again. And because I was reading something the other day, I'm like, oh, crap, that changed. That's not what I had in my notes, so I had to go change my notes for it because it was part of one of the proposals that made it through two levels and then got changed at the last minute. So if you're looking at articles, make sure their current January article would be good. You know, December article is going to be questionable. So you're looking for articles to help support what you're doing. And also, you know, consider taking continuing professional education courses. Oh wait, that's what you're doing right now. But yeah, pick these things up. And what you're going to find is that for some of these, they'll be repeating a lot of the same things. And what your goal should be when you go through these CPE courses is that you should really take the time to make sure that they delve deep enough into those areas. I'm going to try to go deep in certain areas, but not in others, just so to give you some comparisons. But you don't want somebody sitting here reading a 500-page tax law to you, and it's like, but how does that apply to my clients? And that's how I'm going to try to make this thing as we go through. What I tried to do is break these down into a couple of different issues for you. So at least you know what we're still waiting for within this area. And under the top individual issues, and I can't handle everything within this area, but in our time together, which will be the 2-hour CPE course, what I'm going to be looking at are most of what's inside here. We've got the new standard deduction, which gets a lot of press out there. I think a lot of people on the planet that I know, my clients especially, they understand how these are. We have a loss of many standard Schedule A deductions. Not, yeah, I mean, groups go, but it's like, okay, I can see, yeah, that's fine. We've got some new tax brackets. Fringe benefits, thank goodness so many of these are gone. I mean, there are things that, hey, I have to teach her for review courses, but heck, like, why are these fringe benefits? I mean, just pay taxes on them, for crying out loud. They're not that big, they're a pain in the neck, and they've been, I'll get to that point later on. Our deductions for AGI have been reduced as well. We've also seen the elimination for healthcare of the individual mandate by basically setting the penalty effectively down to 0. We've got a new concept, even though we don't think about it as this as an individual thing, because it's basically a business deduction that we get. It's called the pass-through taxation. And so if you have a Schedule C, or you have clients have a Schedule C, you're going to be entitled to a deduction for your net profit, which is like way cool. So we're going to see this, and that's why I call it an individual thing. We also got some crappy new due diligence issues. God, you know, every time the IRS can't do their job of policing a specific area because there's abuse, what ends up happening, Congress authorizes the Secretary of the Treasury to go through and issue more due diligence work. So we've got more stuff in that with more penalties, and I'm going to end up with some tax planning techniques and opportunities that we have. So those are, when I look at it, when I'm talking to my clients, I can pick almost any one of these and start saying, all right, here are some of the provisions that will affect you, because that's what they want to hear about. I'm going to just talk a wee bit, and that's it, about business issues, because this focus is on individuals, but they also impact the way some of the things that we do business are. Corporate tax rate is going to be a flat 21% now. There's no more graduated rates on it. And that's going to cause people to say, am I better off not having a corporation or becoming a corporation rather than being a self-employed person? How is this going to work? So that's really changing the way we think about doing business. And so some of your Schedule C clients might have that very big question, or maybe they were corporations and they want to become Schedule C again because of the tax differential. Those are big questions, okay? They're questions that I have, and I have to answer them on an individual basis. The Section 179 election doubled up to a flat, I'm going to give you the enacted bill amount of $1 million. It went from 500 to $1 million, but then those are indexed for inflation as well, so that's doubled. There's no more entertainment deduction. Cool, huh? So it's one thing to say I have a business meal, which is good for a client, but the entertainment portion is gone, so that's no longer deductible. And we also have this pass-through entity deduction, which is going to be, and when I look at the things that the people that I talk to within the practice world are dealing with, it's pass-through entities. It's like, boy, we're still wrestling with that for some of our clients. I think that's going to be a big issue for the 2018 year. So let me give you a fun fact. I'm going to throw some fun facts in here just to add a little bit of levity to a tough area. The tax bill was delayed at the very end. So it was like sitting there and it like didn't get passed or anything. It's like, what the heck's going on? And it was because of what's called the Byrd Rule. Now, I don't know if you know what the Byrd Rule was or you remember stories of Senator Byrd, but basically the Byrd Rule came into play. It's at the Senate level, so that's where we're sort of sitting waiting. And what it basically said is that Senate legislation passed with a simple majority requires a 10-year period for tax legislation, or basically it has to have a sunset. So if you're going to go with, like, you have to get at least more than 50 votes, you have to go with the majority, then that legislation cannot extend beyond 10 years, and then it has to basically revert back to the way it was. To make it permanent, you needed 60 votes, and we were not getting 60 votes in the Senate to get this thing passed. So as a result, rather than saying, this has been excluded, which is no longer deductible, or this is going to be this, or this is going to be that, and this is now the new tax law. These are all what we refer to as suspended. And they all have what we call sunset provisions. And what that basically means is that if you read through the literature for most of the code sections that are passed, they have passed them to say it'll take effect in 2018, and it will end at the end of 2025. So basically it's going to run like an 8-year period of time, which will put it into the next administration. If you're thinking of a 2-year term period, then you basically toss it into the next legislature. That's as far as they could go out on that. What's going to happen is that they then run into what's referred to as the fiscal cliff, and that is that if Congress doesn't do something by the 2025 period, then the laws revert back to the way they were at December 31st of 2017. And so that's where, when we start thinking about how PATH went through and did extenders to kick things down the road, this is an 8-year kick down the road. And in 8 years, they have to go through and re-vote these to extend them, or they're going to lapse back to the way they were. So that's going to be interesting when that time comes. We also had a new term coming in here called chained CPI. And chained CPI is a different way of calculating your consumer price index. So as you start looking for different words, that's just a different methodology that basically slows down some of the changes to do more of an averaging as opposed to a spike in there. So that was one of the big changes. So those are some facts. So what I'd like to do at this point in time is take a real quick break with you folks, and here's your first learning question number 1.